going to be covering this over a 4-week period. Now, we did this before, right in the beginning days when we just released RAC back in 2014, if you can believe it, it's that long ago. And we just found that this format was really helpful to a lot of users so that they're not taking 2 days off work to try and get through everything. And then in the end, you end up with a lot of information overload. But rather by taking it in these bite-sized segments, you're able to view the stuff with us. You'll get the YouTube video, but try it out for yourselves, maybe have an active engagement. And then you've gotten a time to absorb the information rather than trying to rush through it in a day or two, which really is just going to be an explosion going off for everybody. So that's the reason for the split up. So we'll be meeting together over the next 4 Mondays, including today from 2 o'clock. We've said till 4:30. We might finish a little bit before that today, but some of the other sessions we probably are going to stretch quite close to that 4:30 cutoff, because we do want to, in this session, go through these working papers in detail. Very often when I come to do training, or if we do online demos or any short presentations, we kind of show a few major items in each section and then kind of leave the rest for you to figure out, and what we hope is intuitive for you. But for this series, we're actually wanting to go through document by document, probably not every single question answered, but to really give you a detailed overview of each and every one of these sections. So that's the layout. We're going to do section 10 today, which is the engagement setup, as well as a bit of an introduction to RAC. Next week, we'll deal with planning and risk identification, which is section 11, 12, and 13. Then week 3, we are going to be dealing with risk assessments and audit program planning. And then the week 4, we'll look at finalization and execution of work on those audit programs. So basically closing off audit programs after the work is done. All right. Who should be attending this? What are our outcomes? This is really aimed at staff who are involved in planning and finalization of audit engagements. We're not going to be going through each and every audit procedure on the audit program and explain how to audit bank and cash. Our focus is going to be how to complete the planning to get to an audit program that says, here's your procedure on bank and cash. And once that procedure is done, how to take that result all the way through finalization. So that's where our focus area is. This is intended to be a high-level training session. We can't say that it's limited to managers and partners, because I know some other staff do sometimes get involved in planning and finalization. But because of that, we're also going to touch on the application of professional judgment to address areas of concerns, which we've seen from some of our users about using RAC on small and low risk engagements. And we'll touch on that, probably not this week, or probably next week. We'll touch on that a little bit. But the intention, folks, is to do a deep dive into almost every single one of the documents in our RAC templates. And as I said already, these videos will then form the basis of the little training video hyperlinks on these working papers going forward. We felt the best way to get the best information out there would be to record this webinar. It's live, there's interaction, and you'll see we're going to be covering a lot over the next 4 weeks. And hopefully, when you then get to any one of these working papers in future and you've got that hyperlink, it'll be quick and easy for you to just hop in, watch the video, and you should hopefully have an aha moment and you can continue. Now we're talking about this thing, RAC. What does RAC stand for? RAC, the name is derived from risk assessment per component. This was the development we did back in 2013, released early in 2014 for the first time. So it's going on nine years. Next year it'll be 10 years old as a methodology, but obviously it's looking very different from what it did 9 years. Purpose, folks, we're continuously improving, developing, getting feedback from users, and then of course the latest ISA 315 brought about quite a substantial change, and that's what led us to decide that we would no longer charge for RAC as a premium product, and it would make it available to all users, because we felt that Audit Lite Plus, which was our previous audit methodology based on the ISAs, it was a lot more manual. We just saw that it was time to end of life Audit Lite Plus. So if you have been using Audit Lite Plus before and you still are about to commence with a set of financial statements for the year ending, or commencing, sorry, before 15 December 2021, you can still use Audit Lite Plus in your roll forward. And you'll see that when you go through the roll forward, it's going to pop up this little screen, which goes and confirms, since ISA 315 is optional. In other words, if you applied it to this audit, it would be an early adoption. So it's an optional update for those financial year ends. You can still roll forward. But if you try and roll forward an Audit Lite Plus file and the financial year commences after 15 December 2021, you will see that it'll indicate that ISA 315 has not been applied. So therefore, you need to please switch methodology to RAC. Now in RAC, we do have an option on roll forward to still use the old working papers if it's not a financial year commencing on or after 15 December 2021. So there is the option there for you to still use old RAC and only apply ISA 315 if you wish to early adopt. But if your financial year end commences after or on 15, you'll see that option is grayed out. It's mandatory to apply ISA 315. So RAC is in essence our only methodology that we have in Draftworx that is still compliant with all the ISAs for financial years commencing on or after 15 December 2021. That's our only ISA audit methodology, still available. So please do make use of RAC. Now, this has presented a bit of timing problem for us. So we did release the new RAC in the beginning of the year, and then we had a lot of clients saying, look, they still haven't rolled forward their old audits. They've still got an audit that doesn't have to apply ISA 315. Can we please help them? And the first few, we manually created the files for them, but that's then when we created this little block or this option on roll forward to allow you to apply the old. But we are wanting to basically go and remove Audit Lite Plus and remove the old RAC working papers in the near future. And so there is a second poll that I'd like to run quickly. We'd love to hear what the status of your audits are at the moment. And popping that poll up now, we're asking you, are all your clients now on ISA 315, or are you still in a position where you're needing to use the old RAC or the old Audit Lite Plus? We're just wanting to get a feel for where things are in the market. The intention was to maybe look at closing it all off by the end of June. But if that is going to be a problem, if you are anticipating audits for financial years commencing before 15 December 2021 to still continue after that, we'd love to hear from you in that regard. And this poll was for us sort of a first opportunity to kind of get a feel for what the realities were pre-revised ISA 315. So getting to about 50% of folks have voted already. I'll give it another 15 seconds or so if you would like to just click one of those options for us. It'll be helpful for us to kind of guide us in this decision. Okay, I'm going to cut that off there. Going to end the poll. If you haven't voted, don't worry. It doesn't mean that you're left out. Obviously, what we do here is going to be applied to everybody, but we just wanted to get an early indication. Very, very glad to see the majority are sitting now with no more old audits that they still need to complete. Our suggestion, folks, is that if you are still needing to roll forward files and use the old RAC, do it sooner rather than later. If you are really in a position that still needs to happen, we'll obviously communicate a little bit more closer to the time, but we just wanted to get an idea of where things were. But with, what's that, 43% basically still sitting with a need to do some older audits, we might have to push that out a little bit further. But thank you very much for that input. That's definitely helpful. Okay. All right, so let's go and have a look at the RAC folders that you're going to see when you're working with RAC. So obviously, we're not going to be looking much at financial data, and a little bit later, we will jump into a live file that I have for my demo, and we're going to focus on working papers. We're not going to look so much at client setup or at lead schedules or anything like that. We are worried about the sections that we're going to be working on. So I just did a little bit of a split screen so that it was a little bit bigger, otherwise the list gets too long. And what I've done is I've opened up all the various business cycles that we have in RAC. Now, this was actually a decision that we took back in 2013 when we were busy with development. We tried to move away from a component-based audit approach to rather focus on a cycle-based audit approach. And the reasons for that were we saw just in industry, personal experience, remembering that most of the guys that work at Draftworx and are either in development or are part of the support team have done articles, have got a degree. We got a few CAs that are employed by Draftworx. So it's people that have been through this themselves. We're not just software developers that know nothing about accounting and we're waiting for feedback. We're guys that have actually done this and waiting for feedback, and we can make improvements based on feedback that you can give us. But today we start with section 10, engagement setup. You'll see that our file starts with finalization. That was always my experience. You wanted those final financial statements on top of the file. And the planning actually starts in section 10. Now that's consistent across all our working paper templates and Draftworx. Everywhere we start in section 10. We've just pegged that as a good starting point so that finalization lands at the top. But then those various cycles are only going to appear as and when you actually have something that's applicable in them. And when you start the file with Draftworx, it actually stops in section 20. There's nothing else in the working papers menu until such time as you go and populate the audit programs, which we'll touch on next week. In fact, not even next week, probably the week after in week 3. Now, the reason we've done that is there are actually, in theory, 27 different audit programs that you can have in Draftworx in a RAC file. And we don't want you to go and have to say, listen, biological assets is not applicable, intangible assets is not applicable, and so on and so forth. That is going to be time consuming. And we don't want to waste your time with unnecessary steps. So we'd rather say go and scope the file in the engagement and team setup so that when we generate your audit programs, you only have the applicable audit programs visible. And then not applicable stuff doesn't even exist. It saves space. So it uses up less data on your computer. If you're uploading, downloading, emailing, whatever you might be doing to share files, it's less files to share, less things to mark as not applicable. That's our approach. And that's why we've gone about this cycle. And secondly, then there is the ability when you're doing, for instance, revenue and receivables, don't go and allocate one person with a revenue component and another with a receivables component, because they might, especially in smaller entities, be going and asking the same person the same question. Because although those are different components on the financial statements, you actually need to know what's going on. And it's the same sort of questions you're going to ask, whether you're asking about revenue or receivables. So that's the reasoning behind our cycle-based audit approach. But that then is the basic layout that you're going to see in every file sitting under working papers. Then when you have any one of the RAC template files open, or in fact any working paper open in RAC, you'll see that there is a working listed. Now on the far left is our working paper programs and our estimates population. We'll look at that again in week 3. But what we have is also several different drop downs for different templates that are available. And just to give you an example of what you might find here, for instance, under additional templates, we've got templates that are there for unusual circumstances in the engagement. So once again, instead of having every single one of these files available in every single audit that you're doing, you can go and create them only when you need them. So for instance, if you're not relying on an expert, don't create 1905 reliance on an expert. If you don't have any possible instances of non-compliance, don't go and populate 0330. If you're not relying on another auditor, don't populate 1915. But the process is there to go and create these additional working papers. There's quite a long list. This isn't even the full list, but that's there and available whenever you are inside of a RAC file. Then the other thing just to highlight is the coloring. Now, we have very purposely chosen colors all throughout the RAC file, and this is what those colors are intended to indicate. So we have a darker gray for main headings, and we have a lighter gray for subheadings. Generally, our white cells are either calculated, or they might just be because there are so many subgroupings that gray just doesn't really make a difference anymore. So there could be some questions that are populating in white, but the majority that you will look at, you'll click on the white cell and there'll be a formula in there, and generally it's going to be a locked cell, something that we're not wanting you to change at any point, because the calculated value is calculated for a. See a few examples of that even as we start working through the working papers today. Then we've got this sort of light orange color. I do hope the colors are coming out the same for you as they are for me. You never know with the internet, but this is a light orange on my side. Some people call it peach or something like that. I'm not sure what you're seeing, but for me it's a light orange. These cells are there really just as directions. So we're trying to highlight something or give you some additional information to make you aware of something. It's something that's not typically going to form part of the file itself, but that we're wanting to highlight to make sure that you're aware of something important when you are in that place in the file. Then the red cells are ones you really need to be looking out for. It's an indication that there is an error in your inputs. So something about what you've input or selected is invalid and must be changed. So you need to physically go and make a change to get those red cells to go away. Sometimes it's changing that cell in particular. Sometimes it might be something else that leads to that cell being red. But red, you need to be seeing red if you see red. I hope it comes out clearly for you. We have toned the brightness down a little bit. The earlier reds were very bright, so we went and just toned down to more pastel colors when we did an update a little while ago to our colors. But the red still means red, as in stop, do something about it. The yellow is an indication of some form of a compulsory input field. Now, we often get asked about how much detail you need to put in working papers, and it's a very difficult question to answer. And we'll touch a little bit more on the detail next week when we get into some of the more wordy working papers. This week, the setup, there's not much volume to document necessarily, but the yellow is indicating where here you've got to do something for us, please. You've got to go and put an input into the cell. Now, that could be either because without it, you're going to get a wrong answer. You could probably argue that for most input fields, that if you don't answer something, you might get a wrong answer, like you might miss that they're related parties because somewhere in blue, you didn't fill in who the related parties were. But the yellow are particularly important because it's going to affect the flow of the working papers. And again, there'll be an example of that I'll show you today. The dark blue and light blue, sometimes you're only going to see light blue, so you won't really be able to distinguish between the two. But I'm hoping where you do get the dark blue, you're going to see it next to the light blue and be able to distinguish between those two. And these darker blue cells are what we call roll forward cells. Now, the intention of these roll forward cells is, as far as possible in RAC, we've tried to build the ability to automatically roll forward information to the new financial year as much as possible. Now, we can do that in some places just based on formulas. And again, that you'll probably see more next week than you will this week. But the intention is that when you roll forward your file, we don't want you to keep a copy of the old file from last year in your file. Think about this year. We moved to a new ISA315. If you kept some of your old working papers in RAC in the current year, then those working papers would no longer be compliant with ISA315. But the way we've built these roll forward cells is that even though we've done the ISA315 update, you can roll forward your RAC file to the new financial year and keep all that documentation in those cells in place in the new year, a new template built in. So we pull in the latest version for you and roll forward, and you've got the compliant working paper, and we put in what we can wherever we can. We were even able, for instance, to roll forward risks from the pre-ISA 315 update RAC to the new ISA 315 files. We did, because of the extent of changes required with ISA 315, we did require this year that risks get reassessed. So we roll forward the risk, but we didn't roll forward the other documentation this year. But generally, we roll forward a lot of additional information about that risk. So which components it impacts. And you'll see that section 15, section 16, when we get there, if you're an old RAC user, substantial changes. The whole layout has changed on those working papers. But yet we were able to carry forward your risks from last year using our roll forward technology. And then the blue cells are just for other user inputs. The reality is sometimes you don't need to complete something in every single blue cell. I think sometimes you'd probably go crazy if you tried to complete something in every blue cell in RAC. And so for this webinar series, I'm definitely not going to try to do that at all because it's going to take too long. But the extent of testing is always, or the extent of documentation is always going to be based on professional judgment. So if it's a small, low risk client, what you would document is less than what you would on a higher risk client in general. But again, it comes down to professional judgment, and we'll touch on that more next week. You as a firm can choose, are we going to put not applicables, or are we just going to leave it blank? The choice is up to you. The reality for us, and again, I may be going a little bit ahead of myself into what we want to touch on next week, but it's very difficult. This question is not applicable for all small engagements because maybe you've got that one engagement where it is applicable. It's very hard for us to make that call. So we're rather cautious and ask the question and give it over to you to decide whether or not that is applicable. Just out of interest, and I don't know if any of you know about this tab, there is this developer formatting tab. But if you are wanting to create your own working papers or your own highlighting, there are a few quick shortcut buttons available here to highlight any cell with any one of our default colors. So you can just simply select the cell and click one of these buttons and it will highlight it for you. Clear will remove the highlighting in any cell. And then if you haven't used it before and you are doing some custom work or some nice, clever formulas, there's some fantastic buttons available here to assist you with rolling those formulas into, without having to go and rewrite the formula, you can change it from final to prior. From month 1 to month 2 or month 2 to month 1. And it does so systematically. So if your formula contains an element of final and prior 1 and prior 2, it'll cleverly change final to prior 1, it'll change the prior 1 to prior 2, and it'll change the prior 2 to prior 3 with just the click of a button. Or even so with months, if it contains multiple different months in the formula. And also if you're wanting to move a formula from company to a group formula, or from a group formula to a company formula, you can use these buttons to very quickly just select the cell, click the button, and it'll update the formula in the selected range for you. So you can select multiple cells at the same time and use that. So that's just a quick extra 5 cents value add for you guys on a Monday afternoon about some fun buttons that you have available for you under the Developer Formatting tab. Now, with the latest update, we've also sent this as a working paper to everybody in RAC, and it's available as document 10.00. Show that to you shortly in Draftworx as well. And this, folks, gives you a detailed workflow of everything going on within RAC, all the way from pre-engagement through to finalization and reporting. And you'll see we've tried to build some arrows in place to show you how information is moved and what information is used where. There are far more lines that we could put in here because the links between working papers are quite substantial, but we've tried to highlight some of the more important ones. And for instance, we'll touch on something in 10.01 shortly, and it then feeds through to 11.05 and 11.10 based on whether or not it's a new or continuing engagement. There is information from your planning materiality and identification of audit sections that then also goes through and flows into your risk assessments, which is critical information when you get there at the end of the day. So, folks, hopefully a helpful tool to guide you through the RAC process. But as I said, today, this is going to be our focus. These are the documents we're going to take a look at, and let's get stuck in and get going. All right, so let me close that and go into Draftworx. Now, as I said, folks, we are not going to be looking at client setup, financial data, taxation, or lead schedules. We're going to get stuck straight into working papers today. I've created a file, I've made the methodology or the working papers I've made to RAC, and I've imported 3 years worth of trial balances. Folks, always our preference is to get 3 years of trial balance at minimum into a file if you can. It helps especially with the cash flows. All right. And section 10 is where we're going to get going. And let's start. Now, I'm going to go through this document sort of in as much detail as we can, but you'll see that from time to time, I'm going to then jump to another working paper because there's a hyperlink. And this, again, underlines the linked nature of these files. Just see, sorry, I'm in a developer view, not the normal view, so I'm going to close that. And on every single working paper, virtually every single working paper in RAC, you'll see that we've got a grouping for the heading. Now, we have seen more and more that users are making use of printing a lot less, and this would really only be required when you're printing. So we by default have this closed, but if you ever do need to look at any of those details, you can simply go and open up that grouping. We close it just to create a little bit more real estate for you on your screen. Now, I've deliberately selected a fairly low screen resolution for this webinar, so that if you have a low resolution on your computer that you're watching this on, it's not going to be full HD and you're unable to read what's going on there. And secondly, it just makes it a whole lot easier, lower bandwidth. And when we finally upload it, it goes and makes it a whole lot easier to use in general. So I've gone for a bit of a lower bandwidth, a lower resolution, so that you can see the realities of what many face on a day-to-day basis in terms of their resolution. I sit at home and I work with 3 screens, one of which is a 55-inch 4K TV. So when I'm doing development, I don't have a problem with real estate. But if you do, there are a few little tips and tricks to help you create a bit more space. And one of them is the use of these groupings, especially where we have freeze panes like we do here, where the heading is static. If you have too much open, you might struggle to read the entire question because some of them do get quite large, scrolling quite difficult. What you can also do, if you wish, is you can minimize the ribbon by simply double-clicking on any of the tabs in the ribbon, and that'll give you a lot of extra space. You can still access the ribbon by clicking on it, going and selecting the button that you want, or you can once again double click to open up the full ribbon. Now, I'm going to put that off for now, just to try and maximize space. Now, folks, as we get to question 1, we're faced, the very first cell in RAC is a yellow, which is a compulsory input field, and it's saying, is the engagement a new or a continuing engagement? And we have the drop down available for you to select one of those 2 options. Now, if I say this is a continuing engagement, you'll see that it goes and changes the yellow cell to the same light blue as it does everywhere else. And if you are doing steps like this, we want to recommend using the sign-off bar on the right-hand side. You'll see there's a button at the bottom to add your initials and the date. That does not sign off the entire working paper. It just literally inserts my initials and date into that cell. All right. The second working paper in Draftworx is 1001. Well, it's now the third, I should say, because we have this 1000A now. It's the new engagement predecessor auditor review. Now, I will come back to this one shortly to take you in detail through it, but I want to show you that because I've selected continuing, it's hidden all the questions in 1001, and all I've got is that this document is not applicable, and you can simply go to the right-hand side in the sign-off bar, go and mark it as not applicable, and it'll highlight it in blue in your menu, just to show you what that does. So anything in blue is marked as not applicable. However, if I go back to 10.00 and I change this to rather say this is a new engagement, back, it'll now have the detail of the questions, which we'll come back to a little bit later. So at this stage, if it is a new engagement, you would need to go and make it not applicable. You can do that in the electronic review, and then you can sign it off as normal, but we'll come back to 10.01 a little bit later. Let's continue on 10.00. It goes on to ask a number of other questions. The next one being, is it a component auditor or a sole auditor? Now, the majority, I assume you're going to be the sole auditor, but if you are a component auditor, please go and make sure that you have got the right instructions, that you are following the relevant ISAs. We've not built RAC specifically to cater for component audits. So you will need to go and just make sure that you bring in the necessary documentation. Are you going to do the planning? Are they going to send you the planning? Are they going to send you the procedures? You would need to determine whether it's even applicable or appropriate to use RAC, depending on how the audit is structured. If you are just auditing one small component of the client rather than the full audit, but just to note that, and there's the default option, as I say, would be sole auditor, and I can sign off that as well. If you don't have a reference to that, then obviously we're not going to worry about a hyperlink, but a hyperlink is available if you do need to do so. Question 3 talks about a change in the terms of reference. And this is specifically referring back to your engagement letter. And to go and have a look at those requirements in terms of ISA315, has there been any significant change in audits, in ownership in a new engagement, for instance? If there has been, and I answer this question, to document the changes. Now, this is the first time you've kind of seen on the same working paper. If you haven't used RAC before, it opens up a new row for you basically to put in this information. And then you can either go and document this information in the cell, but if it is too much, if you're going to need to write half a book when you put this in, please rather go and create a new workbook and go and put a hyperlink into that new workbook rather than filling in pages and pages of information into a single cell. Once again, professional judgment, you can determine how much you want to write, depending on your professional judgment, the complexity of the engagement, and so forth. But obviously, if there is relevant information that you need to put in, you need to put that in. And once again, you can sign off the step as you complete it. All right. Then we get to question 4, which references us to document 10.02. And again, we'll go and have a look at the detail around 10.02 in a few minutes' time. But for now, what I'm going to point out is that there are yellow cells indicating compulsory input. But in these two cells, we're actually going to pull the value back from document 10.02 later. So when we do document 10.02, I'll bring you back to 10.00 and just show you how it is completed in this document once that's done. There are questions about changes in circumstances. There are questions about litigation. Then there's a question about partners and the staff having the sufficient knowledge. Have you got the right team to do it? Again, refers to 10.05. Now, in this case, there isn't something that pulls through. So hopefully you can go and complete 10.05 and come back and say, yes. I'm just going to put in a yes for now. Preconditions of the audit. Now, the reason this question is being asked is it's specifically dealing with the framework considerations. You need to have a framework before you can do an audit. And once again, there's 10.04, and we can complete that later and come back and ensure that the right information is populating. Asks about specialized industry knowledge. If you do need this, then you are probably going to need that reliance on an expert working paper, which is found over here, 1905. If it's no, then you can just sign off that item. Capacity, again, refers back to 1005, new circumstances, looking at increased engagement risk. Then we get to, is an EQR required here in question 12? And it says, please complete 10.0003. Now that is a sheet within the same working paper. So when I click on the hyperlink, it takes me to this sheet, and it now asks me questions to assist in determining if an EQR is required. Now the ISAs give us one instance in which an EQR is compulsory, and that is if the entity is listed. And the moment I say listed, it tells me that an EQR should be performed, and it says make arrangements with a quality control partner for a timely EQR to be performed. And it actually references you to 0700. Obviously, we're not going to go through that in detail today, but there is my EQR working paper in which you go and assess the EQR before he's even appointed to that role. Final partner conclusion, is an EQR going to be performed? If I say yes, it is, and the answer that it's determining is yes, this cell goes blank. However, if I say an EQR required, it says, please go and get a detailed explanation of why you're not doing an EQR, even though it is required. If the entity is not listed, then it asks various other criteria. Now, folks, these criteria are not determined by the ISAs. They are determined by your firm in your ISQM. So please go and make sure that you complete the items per your firm's ISQM and then determine if any of those are applicable. Some firms will use a PI score calculation. Some firms will have various other criteria to determine where and when an EQR is required. And so you would then go and document those specific items. And if any of them comes up with a yes, it's going to prompt you to ensure that an EQR is performed. I'm going to make that a no. I'm going to say an EQR is not required. And this engagement partner sign-off will actually populate automatically once I sign off as a partner reviewer. Now, I am currently logged in as a partner, so there are a few cells that I'm clicking on which I can edit, but would not normally be available for editing because they are locked cells. But just to ensure that I get good flow while I'm going through this, I have logged in as partner already. And you'll see that if I click partner review, it's going to insert partner sign-off. However, that signs off the entire working paper. So I'm not going to do it now. I'll do that at the end once I've done everything else in 10.00. So let's go back to the first sheet, and it tells me an EQR is not required. Then it asks a question about whether or not the entity falls under the Companies Act of South Africa. And there are two major reasons for this question. Again, in this working paper, I can click and it takes me to that question. Do you fall under the Companies Act of a trust? You do not need to calculate the PI score. So if you're a South African audit firm and you're auditing a trust, we've had many queries about this. Why can't I calculate my PI score for a trust? Well, folks, a PI score counts for companies falling under the Companies Act of South Africa. CCs as well, you determine there. So remember, if you're auditing a CC, you would say yes to this question because you do need to do a PI score calculation. And for whatever reason, you are auditing the CC. It might be because of the PI score. But this is there to see if the entity is Companies Act of South Africa related. If it's a sole proprietor, if it's a trust, if it's a partnership, if it's a school, it doesn't fall under the Companies Act of South Africa. Unless they're an NPC school, then you would say yes. The other reason is for our non-South African users. Here, all your entities would not fall under the Companies Act of South Africa. And then you'll see here's our first instance of one of these orange cells. I think there wasn't one here. Eh? Oh, there was actually an orange cell here too. Sorry, missed that one. Here's one of the orange cells. We determine sample sizes at the moment based on entity size and the risk factor that you're presenting us with when we do sampling. So we ask you to make a determination of the entity size. And as a firm doing an audit of an entity that is not falling under the Companies Act of South Africa, you can use whatever criteria you like to determine the size, but please go and just document your reasons. I would suggest as a firm, you make a decision. When is it small? When is it medium? When is it large? You could then still say it's based on the PI score and do your own separate calculation for a trust if you really, really wanted to, but that's up to you as a firm. We're just asking you to make this determination so that we can properly populate the sample sizes when you get there. Now, this cell that's yellow, please document reasons. Please go and document something. Now, I've said this often, folks, unfortunately, there's obviously with ChatGPT, there are ways we're looking at, is there any way for us to leverage AI to facilitate and maybe measure whether this is actually an intelligent answer? But ChatGPT already tells you that it might get it wrong. So we're not necessarily sure it's quite ready for that level of sophistication or for that level of detail. But nonetheless, I can't look for an intelligent answer to change the highlighting. But I'm hoping as a reviewer, when you get to a blue cell and you see gibberish is written, that you will then appropriately raise a review note. But we can't look for anything intelligent. If you are needing to calculate the PI score, we know that there is a PI score form, but the intention of this form was always more about deciding, am I actually creating the right file? So before you start the RAC engagement, go and determine the PI score and see, is an audit required or not? What framework should I be using? All of those questions are answered here. We don't then, folks, carry that information over into the file itself. This is your audit working paper, and it forms an integral part of your audit. And because we use this information elsewhere, we ask you to go and make a clear determination of this here. So you go and determine the type of entity. Is it a private company? Just to go show you, for instance, if I say other, it's going to mark everything as not applicable because it shouldn't be falling under the Companies Act. All right. One of these could fall under the Companies Act, and you'd need to go and make an appropriate selection and determine how the financials were compiled internally or independently. All right, so the guidance, those hyperlinks will take you to our guidance sheet where we've gone and inserted a lot of guidance around the PI score. I think at the moment, people are a lot better. They're understanding the PI score, but certainly in the early days of we got a lot of questions around how to answer these questions. Number of employees on average for the period. please type in the value. Total of third-party liabilities of the entity. Now, folks, this is not your total liabilities as per your financial statements. It's third-party liabilities. And for that reason, we have not created a formula to put in the value here. All right. We ask you to please go and calculate that. And I would highly recommend going and inserting a working paper reference to show how you determined third-party liability. And on our latest financial templates, we actually have a little calculation where we try and help you through the process of calculating third-party liability. Okay. Turnover for the period, same thing. Turnover is not the same as revenue on your financial statements. Please go and check the guidance and ensure that you are inserting the right number for turnover. All right. You'll see that I've inserted 3 values, but my PI score is still 0. We do that to make sure that you've completed everything before doing anything further. So until I've put in the number of individuals with direct shareholding, it doesn't put any value into the PI score. All right. Then we do have a number of additional questions. These are all to help determine whether or not it is an audit and to check whether 92B is applicable to this engagement for those with companies. I'm just going to mark the first one as a yes. You can go through those questions in detail. We've got questions also to confirm whether or not the review exemption is applicable. But again, because you're in RAC, we're expecting the answer to be audit, but we ask the questions anyway so that there's somewhere where you've of audits in terms of the Companies Act, and asks you whether or not this entity is subject to this rotation, and asks if it is a public interest entity in terms of the URBA code. It then goes and determines, well, there are 2 reasons why it is an audit, so therefore it's an audit. So if I get any yeses under the audit questions, it's an audit. If there are any of all 3 of these are yes under independent review exemption, then technically it isn't even needing a review, never mind an audit. But nonetheless, as I say, we anticipate the answer is audit. So although we ask the questions, we don't expect it to come out to that. If it does, and you're doing an audit, you might want to go and revisit why you've created a RAC client. Then it goes and looks at the 92B. And again, if any of these are yes, it tells you that section 92B is applicable. It says an audit is required, and we can go back here, and all of these cells are now completed for me. Partner rotation, mandatory audit firm rotation is included as well. The last sheet that we have here is around audit tenure and disclosure of audit tenure. Now, I am quite sure that in many cases, your client is probably not required to have this disclosure. But nonetheless, again, we ask the questions rather than not asking the questions, so that if URBA comes and asks you, did you consider audit tenure disclosure in terms of Government Gazette number 39475 of 4 December 2015, you can show them 10.00.04. It's not a public entity. Do you want to make voluntary disclosure? No, therefore I'm not required to disclose my tenure. If you say yes, it's going to ask you various other questions around your audit tenure. Okay, change that back to a no. Last few questions. I'm not going to go through the details of these, but again, we're answering most of these yes or no. Put in your initials, put in the hyperlink to a working paper, and as required, again, the level of detail. And the last 2 questions are critical, marked in yellow. What's your conclusion? Am I able to accept this client, and therefore I accept the engagement? Please go and make sure that those 2 cells are completed properly. The guidance sheet, all of the working papers virtually in RAC will have a guidance sheet. Many of them will have a training video link. After today, we're going to be updating working papers with all the newest links. We also, in 10.00 go to a lot of detail in terms of the guidance around the PI score. Again, a lot of that was due to the early queries around PI score calculation. But the guidance sheet is going to take you through each step. So you'll see it references the actions and will take you through what is required in each one of those actions. And then we also now are adding a lot more detail in terms of ISAs, because we're actually pulling in the ISA paragraphs for you. So you don't ever need to have your ISAs available on the side. My favorite ISA, if you don't know it, ISA 200 paragraph 19. This is why we built RAC. Because the auditor shall have an understanding of the entire text of an ISA, including its application and other explanatory material, to understand its objectives and to apply its requirements properly. That is your requirement as an auditor. You got to know all the ISAs back to front. You got to know how to apply them. But with RAC, we're trying to make it easier by asking the questions up front, and then that will guide you through the process of compliance. All right. So if you're unsure about why something is being asked, you can go and have a look at this. As we're rolling it out, you might find some still just have lists and not the details, but it is a bit of a work in progress. It's a lot of information to capture. So we just ask for your patience as we go through that. Okay, so next on our list is 10.01. And if you open up the document and this is all you see, it's because you've said that the document is a continuing engagement in 10.00. So we did mention it earlier, but if that is not correct, if this is supposed to be a new engagement, then you'd need to go back to 10.00 and you would need to physically go and change that answer in question 1 so that it'll allow you to see the detail. I'm going to go into the step-by-step here too much. But folks, this is a process of going and getting information from the predecessor auditor. All right. Now, it starts off with the name of the predecessor auditor, and then it does ask you, did we receive permission from the prospective client to communicate with the current or previous auditor? Now, I remember this being something to discuss back in my varsity days. I must admit, it's not something that I've ever really encountered. So we're hoping that the answer is yes. And then, I don't know if you'd have noticed, but some of the questions have changed based on that question. So it is pretty important for you to say whether or not you got permission. So it then focuses just on those questions related to if permission was granted. If I say no, it's going to change that to say if permission was refused. So it then tailors the questions in this section based on your answer as to whether or not you got permission. Now, again, I hope we do get permission, but I do know that sometimes it might be that you didn't. So then you can just follow the correct approach. A little further down, you'll see, are we satisfied that the reason for resignation by the predecessor auditor has been resolved, or can we manage effectively? Well, if the predecessor auditor has resigned because the client has been committing fraud, it might be questionable whether or not you can do that. So answer the question as appropriate. Okay, so it does go into details about why the client has done. Are there any reasons that you pick up to decline the engagement, and provide details accordingly? But at the end of the day, we come down to the bottom. Based on my knowledge of the prospective client and any factors outlined above, this prospective client should be rated as, so we give it a general risk level. Now, if your answer to this is high risk, I do hope you've documented clearly above, and that when you go through this audit, you are going to document a lot more detail when you're looking at risks, because that's what you're indicating, that we've got a high risk. If you see it's a low risk client, that's great. This is basically what you are signing off from 10.02 as well. So that's your independence declaration. So you see there's actually a link from here to 10.02 as well. So you need to go and make sure that you can sign off these things around your independence, and you can then make a final decision on whether you should be able to accept the engagement. Now, folks, it might very well be that you've decided this already, because theoretically, you probably wouldn't be making a RAC file if you shouldn't be appointing the new client. But maybe it's just a check for you to make sure that you've actually documented sufficient details to prove why you can accept the client. And then again, the signature that you put in here, you nearly need to go and sign off as partner on the right-hand side, and it'll put in my initials and date. Again, because I'm logged in, it's an editable cell for me, but generally that's not an editable cell. We do prefer using the electronic review whenever possible. Okay, so that's 10.01. Just interestingly, I didn't intend to do this, but you'll see that at the moment 10.1 is now missing from my files. And that's because I've actually marked it as not applicable and signed it off as partner reviewed. This is just another little side tip and trick for users. If you want to remove, if you are looking for something but you cannot find it in your working papers, it might be that you've got the setting on to hide items that are partner reviewed and not applicable. This is especially useful for things like your lead schedules, where you want to hide not applicable lead schedules. You can go in, log in as partner, tick all the not applicable ones as partner reviewed because they've got 0 balances, and then that wouldn't be listed on your menu items anymore. So just as I saw this, I saw 10.01 was missing. I was trying to figure out how on earth I opened it, but then I remembered I'd previously marked this as not applicable, but then I partner reviewed it, and that's what the impact is. So let's go on to 10.02. 10.02, the audit firm's independence. There are going to now be a whole lot of questions that ask you around whether or not any of the prohibitions that we get from the various codes are in existence with this client that you are wanting to take on as part of your engagement process. So it's going to ask you, do you have financial interests in the client? Do you have any loans and guarantees to or from the client? Do you have any close business relationships with the client? Now, that's a fairly substantial list, but this is taken from the code, and we therefore need to go and consider whether any of these potential threats to our independence exist. Now, at the moment, you'll see the yes/no column is highlighted in blue. The items on the right are white. So at the moment, I'm not expecting anything to be documented in here, and you'll see there's not a formula, so there's nothing I'm in here either that'll pop up at a later time. But the moment I say, yes, I do have financial interests in the client, it immediately marks in yellow, meaning a compulsory input field, document the reason for the prohibition, and document actions taken to eliminate or reduce the threat to an acceptable level. Now, if I go and say, again, I can't look for anything intelligent, but I can go and document information in this. Now, when you get to the actions, please go and read the guide, the codes, because the codes actually give you details of what to do in terms of eliminating these threats. So if you do have financial interests in the client, it goes in details what you can do. I'm going to go to a few of the others. I'm just going to mark this one as a yes, and I'm going to answer a few more as no. Now, as you can see, you can type. You don't have to use the drop down. This is simply a yes and no. So it might be faster. And also, if you like, and you do know the answers are all yes or no, sorry, you can go and use Control-C and Control-V to copy and paste. But I just want to deliberately leave a few unanswered, and I want to show you later where that pops out in 10.25. Provide any additional comments. And then you now need to go and give a conclusion, which we hope is that in all respects you are independent and can be seen as independent with regards to this audit. And based on that independence, can you accept decline the engagement, or do you actually have to withdraw? Maybe you've already changed and you now need to withdraw. There's actually a working paper for that, withdrawal from the engagement, but we'll look at that in finalization. So I accept the engagement, and once again, I can use my partner sign off, and it puts my initials and date in the bottom. If somebody else has prepared and reviewed it, they can obviously sign those as well. But in this case, I'm the partner completing it. I'm just going to sign it off as partner reviewed. Okay. Now this conclusion that we draw here actually gets taken back to my engagement setup document. And if I then scroll down, sorry, I scrolled too far. Here is my conclusion from 10.02, and you'll see that it tells me here, based on my independence assessment, I can accept this engagement. So again, not a very complicated document, but folks, please ensure that you are answering correctly. There are potential issues that can crop up here if you're not answering these honestly and correctly for your engagement. 10.03 is now a working paper where we look at the individual team member independence declarations. In other words, every member of the engagement team should fill one of these out. In 10.02, we looked at a firm level, whether there are financial interests or any potential independence conflicts. But now we need to do the exact same assessment as part of for each individual in their team. So I would go and put in my name here. If you want to use ID numbers or a personnel number, if it's a very big firm, that might be required. But I'm just going to say here, I am on this engagement. And now I need to go and answer various questions. So it asks, and now just to make sure that we're thinking, the answers are reversed from 10.02. Yes is the right answer, because I'm asking, can I act with integrity? I'm hoping the answer is yes. Can I act objectively? Can I apply professional competence and due care? Can I respect confidentiality? Can I engage in professional behavior? Now, once again, if I say no, it highlights. And then I've got to go and document and document. All right. So once again, similar to 10.02, we are going to be looking out for exceptions, and then you can go and document based on the outcomes of those exceptions, what you find. Again, I want one unanswered, but for the one unanswered and one no, and I'll show you later where that pops up. That also goes to 10.25, but that's the question. So do I have financial interest in the client? In other words, when the reason that it's a yes question, sorry, let me rephrase that properly. I complied with the requirements regarding financial interest, loans and guarantees. So it's not, do I have financial interests? Because remember, if you go and look at the requirements, there are some exceptions. So it's just asking, have I complied with the requirements related to financial interests, loans and guarantees, close business relationships, etc. So the question is phrased slightly differently, which makes yes the right answer. Hopefully you're getting a lot of yeses and not a lot of no's, because the no's will require some additional documentation. Now, in this working paper, you do not sign off as partner review to get your signature and date inserted. Here, each member, please go and insert, use your initials and the date, or if you do keep a manual file, you can print it and log your manual signature on these cells. There is also a question here about finalization. You need to come back to this document, reconfirm that this has remained in force for the entirety of the engagement. And once again, that pops up in finalization 0605. It comes and looks if this has been signed off. At the moment, I've got 3 sheets available for 3 different team members. Your team might be bigger than that. Then you can use the content tab to go and open up any additional items that you want, or in fact, close if there are too many. Maybe it's 1 team member. Then you can go and close those as well. What I just want to do is I'm going to document a few additional details. So Dillian, you could be my manager. I want to just answer very quickly yes to everything for you. You're such a star, Dillian. Well done. And there's your initials and the date, 2023. Damien, you're going to be the naughty kid for today. Just going to put in your name and basically nothing else and not sign it off. And the reason I'm doing that is I'm going to refer back to this later, and you're just going to see where this information carries through. So that's 10.03, individual team member declaration. 10.04 has sometimes caused a bit of confusion for users. We're here busy assessing the appropriate accounting framework. Now, we sort of have done this already because we did look on the PIS calculator, and on this PIS score sheet, you can go and assess what the appropriate standard is. But what we are actually doing here is taking a look at the preparation of the prior period financial statements. So you don't need to look at what the client is applying now. It's looking at what he applied last year. Let's say, for instance, I applied IFRS for SME last year. Then it goes and asks various questions. The first one is a generic, what's the nature of the entity? And you can go and document that in as much detail as you wish, or hyperlink it elsewhere, or ignore it completely. That's really up to you. But there are some important questions to answer. The first one is whether these financial statements are based on a general purpose financial, or are they general purpose financial statements for external users? Now, our assumption is, folks, that it's generally yes, and that would generally tie back to a published standard. But if you're not preparing based on IFRS or IFRS for SME or some other documented, recognized accounting standard, if you're saying it's small GAAP, a lot of guys still try and say they're using SA GAAP. SA GAAP does not exist. It's not a promulgated standard anymore. So then it is no longer general purpose financial statements. So please be careful in answering this question. We then ask questions around the whether it's a state-owned company. And that's really just to go and assess if there isn't maybe a GRAP requirement in here. My assumption is that most of the time you're going to say no. But if you do say yes, there are some additional questions that pop up based on whether or not you're a state-owned company. I'm going to say no for now. Then memorandum of incorporation. And the reason we ask this question is sometimes the MOI gives a detail on what standard needs to be applied to these financial statements. Again, my assumption is going to be that a lot of the time it's no, but if it is yes, it's going to ask you which one must you apply in terms of the MOI. I'm going to again say no. Does the entity have public accountability? Now, this question is dealing largely with the scope of IFRS for SME. That's where this question is coming from. An entity with public accountability may not apply IFRS for SME. So if the answer here is yes, we're going to assess that it should be IFRS. Now, you'll notice that I said here, we applied IFRS for SME, but what should have been applied last year is IFRS. So it's actually a bit of a problem there. So we're hoping maybe you got it wrong there, and it should be IFRS, and you'll see then that row disappears. But if this is really affairs, it was IFRS, and you only did IFRS SME last year, it is potentially a problem for your audit, and you'd need to go and assess impact that will have. But for now, I'm going to say no to public accountability, and it's going to say, give me a conclusion, what should be applied? Now, when we are calculating what should be applied, we are looking for what's the minimum requirement. And you'll see there's a lovely, long, complicated formula there. Don't worry. We're doing our best to calculate what it should have been. However, what could be happening is your client says, we are applying IFRS. And then there's a question about whether or not the correct framework was used. Now, in a case like this, folks, we're asking, is the framework for the current year appropriate? Based on minimum requirements, I needed to do IFRS for SME, but the client chose IFRS. Is that an appropriate framework? Yes, it is. They're welcome to do IFRS when the conclusion is IFRS for SME. However, if the client said, yes, it does have public accountability, and they chose no, they're following IFRS, now I've got a problem. I can't apply IFRS for SME if the requirements tell me I need to apply IFRS, and that's where that question comes in. Just to show you, when we get to this conclusion, let me just change that to a no. I want it to be IFRS, and I'm happy, and I say the appropriate framework is selected. Okay, it then tells me that my report is based on ISA315. The framework is a fair presentation framework, and it gives an example of what your report is going to look like. The financial statements fairly present in all material respects, blah, 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 blah. If you're not following IFRS for SME or IFRS or some other recognized accounting standard, and you've had to say no, and you've put in the specific reporting requirements, it then switches to an ISA 800 report. Okay, and it's now a, we'll have to go and double check that for me, Dillian. Fair presentation. Is that the correct terminology there? Okay, I think that should have changed. Oh, you know why it is? Because I haven't specified. Okay, I won't go through that now. It's because I'm not answering all the questions, so it's not coming up with all the right answers there for me. So let me come back to this. Let me just focus on that. If it's not IFRS SME, it becomes ISA 800 report, and then you just need to be aware of that when you're doing your financial statements, because then it is no longer applicable to say that it's an ISA 700 report that you are preparing there. Okay, so that's 10.04. What I must maybe just show you as well, 10.04, if I recall correctly, remember we were having these questions about the preconditions for an audit. It doesn't automatically carry through, so please do come and complete this question. Have they been met in terms of the standard? Hopefully the answer is yes. Okay. Document 10. Independent evaluation of the engagement team. Now, when I was completing 10.03, I very cleverly went and inserted the names of everybody on the team, and you'll see that it's now pulled in those names for me from 10.03. So I don't need to go and recomplete the names. We do want you just to confirm the level, because sometimes users would not really put the correct level on there. It might be their work title rather than their role in this engagement. So we're looking here for roles, and it then goes and asks, and this is an assessment, folks, for the partner to be reviewing. Obviously somebody else could maybe help them and have prepared the document for their review, but we're asking questions like, do they understand and have practical experience with audit engagements of a similar nature and complexity? And we do this by indicating the number of years of experience. Not 120. Oops, sorry, Dillian. Now, yes, that is maybe not entirely objective, but that's what we're looking for. Then it's asking the question, do they understand the ISAs and the applicable legal and regulatory requirements? I want to just point out that as we go through these questions, the expectation is not necessarily that you have to say yes and something positive to every single cell of every single person. You might have a case where maybe myself and Damien have knowledge of relevant industries in which the client operates, but Dillian is perhaps not as exposed and she doesn't have knowledge in the relevant industry. Remember, then we need to go back to professional judgment. Do I have the team required to perform the engagement effectively. And there I would need to go and consider the risk of the client and what I know of the client. That all goes into determining whether the firm has sufficient knowledge and skills to perform the engagement. So if some guys are not ready to be applying professional judgment, then please don't lie about it. Please say that they don't have the ability to apply professional judgment, and they're probably not going to be involved in the major part of planning as you go through planning. Financial reporting requirements. Again, maybe not everybody is fully up to speed on the latest reporting standards. Answer it effectively. The result is not to try and find a yes for everybody, because I don't think one of those people truly exists at every level in a firm. You would need to go and appropriately decide in each case. And again, this is another document that needs to be taken both at the beginning of the audit and at the end to come back and ensure that it's been appropriately applied, or whatever these things are have been true throughout the engagement. So if you said they were able to apply a professional judgment, did they apply professional judgment? So it's just looking at threats as well to independence, and that's also referring back to 10.03. The audit partner can use that as well to assess that independence. If you need to use an auditor's expert, go and document details there as well. And then this, folks, is the conclusion that the audit partner ultimately needs to make. Are there sufficient and appropriate resources available in a timely manner, taking into account nature and circumstances of the audit engagement and the firm's policies or procedures to perform the engagement based on HR, technological, intellectual, and is the audit budget, pop in a hyperlink to your audit budget, however you want to include that. Then there's also a declaration. The audit partner needs to indicate that they are satisfied that the team has the necessary skills, that the complying with ethical requirements, and so on and so forth. So the audit partner needs to basically certify that they've got an appropriate team to be able to go and do the engagement. If you get asked to go and complete a complex, high-risk engagement and all you have is a team of first years, I would deeply consider whether or not you should be accepting that client based on this declaration. But this is once again a document. Once you've completed it, go and sign it off as partner reviewed, and it'll insert your initials and the date for you at the bottom. And that is then your competencies and independence declaration. Now, in the past, no, sorry, we're not there yet. Next one is 10.10, which is our planning materiality. Okay, planning materiality. Wanting to spend a bit of time on this one, some fairly important things to be aware of. The first is that we've got a very comprehensive setup that is available in order to help you to determine the various bases to calculate materiality on. Whenever I do in-person training, I always say, I used to love it when a materiality calculation came along in an audit exam, because I could generally get 7 out of 7 for it without really necessarily knowing exactly if I've got the right answer or not, because it came down to documenting reasons for your answer more than anything else. Now, based on that, we've tried to create a comprehensive little workbook to help you decide on which bases. So you're able to now in Draftworx go and pick 3 different bases that you want to use to consider. Not even to select it. You can consider 3 bases side by side. So you might have an interim that you're wanting to use, or maybe you want to use final. And you'll see at the moment I changed this item from opening, it highlighted in red this item. Now remember, red was where there's an, because this 4th question is asking which one should I use as the final base of materiality, and opening is not one of those. So then I need to go and change it to interim or prior to, or whatever one of those 3 are. If I go and change this back to opening, then it highlighted in red again, go back to opening. We also do a little bit of an extrapolation for you on the income statement items. So how many months TV do I have, and what do I want to make it into. So it's generally going to be 12 in the second column. But I want to just show you at the moment, my turnover sales is 215 million. If I say that that was a 10-month trial balance, you'll see immediately it's increased sales to an extrapolated value. So I've gone times 12 over 10, basically, of revenue. That might not be the most appropriate way to extrapolate. You're welcome to extrapolate it in other ways. You're welcome to switch off this extrapolation, not use it at all. It's really up to you. But the point is, we do a basic one. If you feel that that's the wrong value, you can go and type in your own, whatever you want to use as your initial calculation. Okay. Then what's the broad nature of the entity? I'm going to say it's profit orientated. We do have options for non-profit or specialized. For specialized, you'll need to determine your own materiality calculation. Not for profit will base more on expenses than revenues, for instance. So profit orientated, and please go and give a reason. And which one, we'll come back to it. We'll come back to that question. Then who are the users going to be? SARS, shareholders, maybe the banks, maybe there are certain creditors that need your financial statements, okay? And give comments on each of those principal users, what impact this could have on your materiality calculation. Then it goes and presents the various bases for you. And in order to then do a possible calculation based on various percentages, we'll come back to that, you need to go and say, which one of these do I actually want to use? You can go and add your own in here. Like I said, these are blue cells. You're welcome to override those values if you feel they're not valid. You can go and do that, but you need to go and make the final determination. Okay, I am going to use opening, which was there before. So that's great. So this possible planning materiality then takes this percentage and multiplies it by the appropriate value under the opening column. All right. Now, the typical percentages that we use, these are determined based on SAICA's discussion paper 6 from 1984. The last time we had any discussions with URBA, that is still the base that they felt was most appropriate. We initially released RAC with the IFAC guide values, but URBA's argument was that the IFAC guide has never actually been promulgated as an official document or guide in South Africa by them, and therefore it's not an appropriate base to calculate percentage on. So if you go and try and change the GP, or let's go and take revenues to 3%, it's going to give you an error that it's invalid. If your firm wants to apply your own percentage ranges, you are more than welcome to do that. We will not stop you. But please contact support and we'll show you what you need to do in order to allow a different percentage range. In future, we're hoping to make this something that can be saved at firm level. So I'm not sure if you're aware of it at the moment. It's possible to send your preferred financial state settings into the cloud and to be able to pull it down for any members of your same firm with the same firm code, which is quite useful. If you are wanting standardization across the firm, please contact support if you'd like to know more. But for now, we're going to base it on those percentages. And when you get to the actual calculation, we don't calculate an average or the max or the min or anything. We say to you, please go and insert your calculation of materiality. It's a professional judgment call what value you actually wanting to use. If you're listening, RAC, I'll always remember back in my first stint as a trainee doing vacation work at the firm, my first materiality calculation was something like 11,532 Rand and 57 cents. And you kind of told me that's not a materiality, that's a calculation. And you wanted me to revise that to something more rounded. I can't remember your exact words, but I'll always remember the learning curve that I had in that first stint of vacation work. But folks, it's a judgment call that you need to make. And based on those, I might go and say, look, I'm going to lean heavily on revenue. I can't put 2.5 million. I want you to see that. It's not applicable. It's too high based on these ranges. You need to go and put something in that's valid in terms of that. And so I'm going to go and say, look, judgment relying heavily on revenues, I'm going to go and make it 2 million. And once again, give a reason. All right. Performance materiality. Please make sure that this is consistently applied across your firm based on your firm's preferences. We use 75 as a default. You're welcome to change that to 85% or whatever your firm prefers. But just please do make sure that you change it then if you are going to be using a different value. Once again, we're hoping to push that into our typical ranges along with those settings at a later stage. All right, so that is my planning materiality and my performance materiality. Then I can go and calculate various specific materialities. Let's say for whatever reason, I might need to test assets at a different materiality. I can go and make a specific materiality calculation for total assets. It calculates a specific performance materiality. And when we get to some of the other working papers, you'll see how you can then select the appropriate materiality based on what you've typed in here. There's also a calculation for clearly trivial. So these are, the clearly trivial is for cases where you find a misstatement that's less than this value. You can call it clearly trivial and not carry it over to your overs and unders. We default it to 1%. Again, you need our help to change it to more than 1%. But if you do want to do that, again, please be consistent. And there might just be a generic value description that you can put in here in terms of the percentage, unless there's a case where maybe you made it lower or higher for a specific client. You might want to go and document that. Okay. Now, these values that we calculate here, we do ask folks, please go and make sure that these things look realistic in terms of your actual financial statements. In the real world, what should be happening is that financial statements are prepared first and then you begin the audit. I know that is not always the case. I know sometimes you might be doing something else first and then coming back to, or you might do some of the planning first and then you go back to finalizing your financials, and then these values might shift. These are looking reasonable. If you're expecting major changes, maybe go and make sure it's more linked to prior. To show you per lead schedule how these values are made up. Now, this is typically what we expect to see on the financial statements, but folks, this is not always going to be as up to date as the financial statements template is. So this is there just as a backup to look for anything weird, or maybe you've done some unusual linking, added your own link numbers, your own lead numbers. That could cause things to go out of balance. And then we do just ask that you come and just update. Well, then you must please update these values of the bases so that you can make an appropriate determination of materiality. Okay. The other thing that we do in 10.10 is you're able to lock these values. So if I go to 10.25, there's a question at the bottom of 10.25 asking you if you'd like to lock the planning materiality. Now, the reason we've done this is, I don't know if it's happened to you, it happened to be a number of times where the client sends us a TB, we calculate the materiality, then they send us a new TB, we import the TB, and then we open the materiality. And now, because of a small change, the materiality is actually wrong. We've actually set a materiality that's too high. Now, that doesn't necessarily mean I've got to revise materiality, but at least you can lock the planning materiality values so that even if the trial balance changes, the values on 10.10 won't. So it locks this, and it will not change that 250 million unless you physically type a new value in there. And you'll see its document is locked in the engagement setup sign off. Don't make any further changes, but a revision can be done on 18.05. We'll touch on that later in the series. But that's where you go and calculate a revised materiality so that you always have your planning materiality distinct from a revised materiality at any point in time. 10.20 is a very important working paper, but maybe let me just first tell you about something that's not here. If you're familiar with RAC, there used to be a 10.15 document that has fallen away completely. We no longer have those selections available. We've just seen that it causes too much confusion, and especially with the ISA315 updates, we've seen a lot of additional documentation needs that we just couldn't cater for with what we were doing with ISA 10.15 anymore. But as I said, we will deal with professional judgment, which is to some extent what 10.15 was about at a later stage in the series. But for now, just to be aware, folks, 10.15 has fallen away completely with ISA 315. Okay, document 10.20 is critical for a number of reasons. Firstly, as you might have heard in the introduction, when you open up your working papers tab right now, there is nothing in section 30 onwards. There are no audit programs. And the reason is that we didn't want to put audit programs that are not applicable in the file until you'd had a chance to choose what the actual applicable sections of the file are. And that's where 10.20 comes in. We go and have a look, once again, as far as possible, based on what you'd see on your financial statements, what are the balances? But please see that the values are blue. You might need to override some of these because of various changes. Hopefully not, but there is a lead reference. And what you'll also see in some instances, I just want to see if I've got an example in here. You might find that one line item has got multiple leads linked to it. That's okay. It just means that it's different line items that we've grouped into one section, like cash and cash equivalents will show the bank positive balances and the bank liability balances as two separate lines. But when you do that audit, it's obviously one component that you are testing. So we first want to go and look for, are there values? If we have those values, is it a material value? Now, I do have my materiality calculation. I have got it listed on the right-hand side here. So it's a very simple process for me to go and say, well, that is bigger than that, so therefore it is quantitatively material. This, however, is also one of the places where you can go and choose that you don't want to use overall materiality, but you want to use total assets, your specific materiality that you calculated. You're even able to go and say, I don't want to use the planning, but the revised materiality in making these determinations. So there's a huge amount of scope for you to go and adjust how you are calculating the materiality on a quantitative level. You're also able to go and indicate that you don't want to use the opening balances, but rather interim or final. Now, if you have imported the trial balance, as in opening balances being the real opening balances at the beginning of the year, the 12 monthly movements, and then journals, then you might have to use final when you get to this working paper. For me, it's not going to make any difference because I imported my final trial balance as opening. But if you're doing an interim, you might want to show interim values here. And there's even the ability to extrapolate your income statement items, like we did on materiality, if you see there's a need for you to do it to determine what is quantitatively material. Okay, but let me go back to my normal opening. Now, do be aware, folks, that quantitative materiality we address both at current and at prior year. For the income statement, maybe that's not always completely appropriate, but for balance sheet items, remember that if your balance last year was material and it's 0 this year, then there was a material movement in that balance for the year. So there is potential for you to be wanting to audit that. You can override that if you wish. We don't recommend it, but we do a quantitative materiality calculation based on what's my materiality, what are my balances in the current and prior, and then we can calculate it. When you get to a balance like depreciation, it is not quantitatively material. We then highlight the cell. Please go and determine if this is qualitatively material or not. And you can then go and choose yes or no, whatever the case might be. Now, depreciation, I might make the assessment here that it is not quantitatively material, but it is linked to a material balance, which is property, plant, and equipment. And if I don't audit the depreciation, then I could miss something in my engagement. So I'm going to say it is qualitatively material and therefore it must be audited. Be careful for zero balances. Tax expense, 0. It might not be quantitatively material, but I would say you probably want to make it qualitatively material. That's a big compliance area that things could go wrong in the tax expense. So go and look out for things like that. I want to also just manually add an amount here for investment income. Now, is it quantitatively material? No, it's not. Is it qualitatively material? I could at this stage say also it's not qualitatively material. But something that has changed since the old RAC is it is still marked as applicable to the audit, even though it is not quantitatively and qualitatively material. Now, what we did previously is we had a document 7020, which was an overall completeness, where we took all these non-material balances and we said, let's go just test for completeness. With ISA315, we've seen that we now actually need to make this component available, even if the balance is not material. We need to make the component available for selection when we're assessing risks. So you'll see that it now says it is applicable to the audit. But when we get to section 15 and 16, we'll have the ability there to decide what to do with non-material balances which don't have risks associated with it. So at this stage, I don't know if there are risks or not, so I need to say that it's applicable to the audit. Please note that every item I'm marking as yes gives a section reference. The other thing that we've also done, folks, is we no longer have the ability to customize the cycles. We've changed the way our audit programs work, and so you can't really move components between cycles anymore, but we have made sure that every single component does land up on a cycle appropriately. So don't worry about that. Everything that is there or should be there is there. The other thing that I'd like to point out is that while we do have these balances largely agreeing to what you see on the financial statements, you might have cases where, for instance, this cost of sales doesn't agree with the cost of sales on your statement of comprehensive income. And the reason is you might have depreciation and payroll expenses sitting under cost of sales, but I want to audit payroll expenses not in cost of sales. I want it to have its own section. I want to audit depreciation and a PPE or whatever other tangible or intangible asset it relates to, not cost of sales. So when we show a value here and it doesn't 100% agree to the financial statements, please look out that it could be sitting under one of these other items. And that's why the balance here doesn't agree with what's on your financials. But at the end of the day, if you go and do a full calculation, it actually goes and checks that it's not out of balance. You'll see that it's come up with a difference of 16. That's most likely just due to some rounding. And so I'm not going to be worried about the 16. But when that rounding gets very large, we would come and report on it. In fact, you know why it's 16? It's 16 because I manually added the 16 here. So that's why. It could sometimes be a rounding difference. If the rounding gets too high or the difference gets too high, we do actually warn you of that fact. Folks, this is a critical document in the process of setting up the client, because you've got to go and make sure you've selected everything that may or may that is applicable in this engagement, and that we've actually got a section for it, that you've chosen the correct materiality for it, you've extrapolated it as required, and that even those items with a zero balance that you probably need to do something with, nonetheless, go and make it as qualitatively material. We also do automatically mark journal entries. Just to go and find it, it's the very last one, always applicable to the audit. Now, we don't have balances here. If you want to, you're welcome to go and put the population of journals, if you can get that from the accounting system, but otherwise we'll deal with that in section 20. Don't worry too much. The other two that we mark as qualitatively material are related parties and contingent liabilities. You may or may not agree with us. You can go and put in the values. and you might say it's not qualitatively material and you can deal with it elsewhere. How you approach that is up to you. If you think it is not qualitatively material, but you do need to assign risks to it, please go and make sure that it still says it's applicable to the audit. Even if I go and make this a no, please go and make that yes. Make sure it stays yes. In fact, it's permanently yes. You have to change it. I'm glad to see that. I forgot that was what was done there. But you can override it if you want to. I think, again, just be very cautious about overriding these different items. Okay. That, folks, in a nutshell, well, not a nutshell, fairly comprehensively, hopefully, document 10.20. Okay, document 10.25. A very nice little summary document of the engagement setup. Why? Because it is pulling through a lot of the key values from various documents that we've now completed in section 10. So when I get to document 10.02, it goes and it tells me that the document has been signed off. It tells me that there are incomplete questions. It tells me that there are 2 deviations, and in one of those deviations, not sufficient information has been completed. Now, what does that mean? Well, let's go back to 10.02. What I completed earlier was 1 deviation and have documentation. There were 3 incomplete questions. So do you see, we very clearly show you there's a problem. I have said it's independent, and I have said I can accept the engagement, but please do just note the details that are pulling through. For 10.03, have all the team members signed off? No. Why? Well, we can go and look. Damien was the truant guy. He didn't sign it off. I've got 2 unanswered questions and 2 deviations, one of which does not have actions. Dillian, well done, signed it off, no unanswered questions, no deviations, 100%. Well, if it was 2-2, that's also okay, because or 2-0, because they have addressed any deviations that you found, but a very nice summary document. And if you're the audit partner, I reckon this is a very nice place to do my review from. Open up this as my index, and I can now go one by one, check the work, come back, confirm, am I happy with what's in this document? And as part of just my review process, I might get to 10.01, I might sign it off as reviewed, but I maybe want to come back to this, and then you can leave that blank and not put the confirmation in place. But there are hyperlinks to take you to those working papers. Part of the reason of this document was just to try and make a nice little summary for you to see the key and most important information. Maybe you don't want to go through the details in too much detail. That's okay. It's a low risk engagement. Maybe your involvement is going to be slightly less. That's okay. That's a professional judgment call. But here is maybe the greatest place for you to be going and doing that. Again, partner review will come automatically if I click on partner sign off. Then, folks, document 10.30, my engagement letter. Now, if you go to the ISAs and open up the applicable ISA standard and go through what should be included in the engagement, a lot of what you see at the beginning of this engagement is what is documented in the ISAs. All right. Up to this point. Thereafter, what you see following is largely requests from clients, suggestions, sometimes pleading, sometimes demanding that we include various additional paragraphs in the engagement letter. Now, my personal preference is that a lot of the information that's dealt with in these paragraphs is probably better as an addendum, which is, for instance, a standard terms and conditions for your firm, which you can then write your own wording in your own way. I remember doing engagement letters for one of the firms I did articles in. I think they had about 7 pages of standard terms and conditions that we just stapled onto each engagement letter, and the client would initial each of those pages in acceptance. I had one client who was who was the only one who ever actually read through those standard terms and conditions. But that probably says more about the client than it does about the auditor, hopefully. But nonetheless, a lot of the stuff is good, but a lot of the stuff maybe is not applicable in the engagement letter, because for me, the engagement letter needs to contain what is said in the ISAs, and everything else for me is additional information. If your opinion is different, you're welcome to it. I'm not being prescriptive here, but please, if you are wanting to use these paragraphs, please make sure you understand the contents of the paragraph before you include it. And again, in terms of standardization, please ensure that you then open the same groupings on each of the files that you create with 10.30. Again, my preference is that you leave all of this closed and you include the details of these in a separate document, but you can do as you feel is appropriate for yourselves, for your firm. Consistency, once again, folks, is one of the most critical things for me. Now, this document does have a settings sheet, and what we do try and do is pull in a lot of the standard information from the client setup. But there are things here that you might want to be changing. So, for instance, we reference here the URBA code. If the URBA code is not applicable to you because you're not in South Africa, or for whatever other reason, you're not subject to the URBA code, maybe you're an ACCA or something else that doesn't subscribe to URBA, you could choose ISBA or whatever other code you need to be putting in there so that it correctly reflects on the letter. We generically refer to director based on the outcomes of the client setup. Maybe you want to refer to something else. The entity type, we try again to populate that, but if it's a different entity type, please go and make the appropriate selection. We try and determine the standard. Please adjust. Is it the Companies Act or is it something else? Is there an additional act? The Financial Intelligence Act detail. This was recently adjusted for some of our overseas users where it was based on the country. Go and put the correct act description in there. But again, please go and make sure these are appropriate for you if it's not populating correctly. And it also just asked about estate agents, trust audits. There's now actually a different set of working paper templates for property practitioners. We're in the process of just updating it at the moment. But please go and make sure that you adjust these if necessary so that it's correctly reflected. And once again, look out, folks, for blue cells. Now, engagement letter date, we haven't yet applied it to this template, but there is actually now a setting in client setup for engagement letter dates. So in future, this is going to refer to that value in your client setup. If you don't want to refer to Sir, please change who it's addressed to. Dear whom, go if it needs to be something else, not generic as I've put it in here. Please go and have a look where it's blue. It's because there is some additional information you need to go and edit or change or update as you're going through it. As you open up any of the groupings, do also be on the lookout for maybe paragraphs you want to add or remove. Like with our financial statements, you can go and put in 0 to go and switch off any rows or delete or put a 1 back to add back that row. You'll see there are a few here that are added, and you can then go and just switch on or on your preferences. So folks, that's the engagement letter. Just a little bit of at the bottom about privacy policy. POPIA, there's also a separate paragraph on POPIA. Again, as you see fit, please go and include what you believe should be in or not. Like I said, most of the stuff that's in the ISAs, we've put without a grouping so that you can't actually switch it off. The only way is to put 0s and 1s in to adjust it. Okay, so that's 10.30.